Hello and good morning. Mic check, 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 check. It works. How y'all doing today? Glad y'all are here to join me on another opportunity to do better. You gotta look at life and say, hey, it's not meant to be perfect. As hard as you try to get things right, as much calculations as you may do, there's always going to be a little imperfection in your plans. So just adjust for that. Let's say it like that, So welcome back for another opportunity for us to learn about this dynamic industry we call digital finance. This is Financial New. I am your host, Nua. Today, we have the opportunity to look at DORA. Who's that? Dora the Explorer. No, that's not her. Expert highlights on the EU Digital Operation Resilience Act of 2025. Y'all want to come sit in on this little presentation with me? All right. Check the like buttons. Check the share buttons. Let's get to it. So that means you should be seeing that, right? Oh, who's that chick? I don't know yet. Let's figure it out. Maybe I should do this before I start the show, right? Sorry. I'm a noob. Welcome to YouTube. Alright. Action.
The question will come to me, and I will present them to the panel. Hi, good afternoon.
Hi, darling.
My name is Michal Freeman-Shore. I head the primary markets in Israel for the London Stock Exchange. Today, we are going to talk about Digital Operation and Resilience Act, or as everyone refers to it, the DORA regulations. We will talk about what you need to know and why is it relevant to you, and of course, the implications of non-compliance. Before we start, I'd just like to say that this session is being recorded, and anyone who wants to revisit the content or share with any of his colleagues can do so by revisiting Spark, where this webinar will live as a video on demand going forward. This is designed to be an interactive session, so we do encourage you to ask questions using the functionality built into the platform. You will see the Ask the Question option below the video player on your screen. The question will come to me, and I will present them to the panel during the Q&A section at the end. So to dive into this fascinating topic in more details, I'm delighted to be joined this afternoon by a panel of experts who I will hand over to introduce themselves in turn. So Ian, let's start with you.
Thank you, Michal. Hi everyone. My name's Ian McCaw. I'm the Managing Director here at Aon, and I head up our Transaction Advisory Services business across EMEA. I have a long history working around cybersecurity and resilience, particularly in some of the larger financial institutions, and have been through, I guess, kind of warts and all experience as it relates to topics like cyber and resilience. So, yeah, look forward to the conversation. Maybe you can hand over to Colby.
You are on mute, Colby.
Sorry, I said thank you, Ian and Michal. I'm Kobe Friedman. I'm the founder and CEO of Findings. We're a SaaS company which is providing solutions for automating supply chain compliance in the cybersecurity, sustainability, and resiliency space, and looking forward to share some knowledge
Great. Simon?
Thanks, Michael. Hello, everyone. So I'm Simon Rycroft. I'm CEO at Cyber Risk Management Group. We specialize in helping clients, large and small, really cut through the noise when it comes to implementing pragmatic approaches to IT and cybersecurity governance, risk, and compliance. And I'm really looking forward to the chat.
Thank you so much. This is very interesting, especially because it's so imminent, right? So let's get into the first question. So my first question is, can you please, and I'll start with Simon first. Can you please explain what the DORA regulations are and its implications?
Yeah, sure, Michael. So let's start with the bird's eye view. So DORA, it's a wide-reaching piece of EU legislation. That's key. It's from EU. It's aimed at ensuring that the financial system, in its widest sense, has the built-in resilience that it needs to withstand any significant, largely technology-related disruption to its operations. At a big picture, to my mind, two key things to be aware of. It's really wide in terms of the types of organization that are in scope of DORA for compliance. So organizations that may well have quite immature approaches to tech and security governance, risk and compliance may well come in scope in a way they never have before. So that's number one. And number two, at a general level, DORA uses language that looks very prescriptive, but actually is inherently subjective and quite vague actually in places. Just look at Article 7 if you need evidence. Anyway, not right now, do it afterwards. But that vagueness is down to something called the proportionality principle, which is riddled throughout DORA. Essentially, that means you shape how you comply with DORA based on your size, your scale, your operation types and complexity, your risk profile. That all shapes how you comply with DORA. It can be a bit of a get out for some smaller organizations, larger organizations, not so much, but those are two really key points, I think, at a bird's eye view to understand about DORA.
Right. Ian, would you like to add to this one? Maybe why is it relevant to financial entities?
Yeah, I mean, look, I think the clearly financial sector is one of the most important sectors in terms of our day-to-day lives and being able to make payments and being able to look after, to get to transport and to look after our families and so forth. So the reliance on the payment system and our financial institutions is key. We've obviously been through a financial crisis in the past, and we've seen what happens when the trust in the financial system is less there. So this whole regulation is about improving the consumer confidence and trust in the financial system, but also recognizing that things like digital resilience is going to be even more key. There's clearly nefarious actors out there that are seeking to compromise businesses. The complexity, though, of our digital environment that we've built is hugely complex now. With the extent of the internet and the way the cloud services work and ICT providers work. So it is a complex web of digital services that need to seamlessly work together to provide a resilient platform. And DORA is all about recognizing that finance institutions is part of that, but so are critical ICT providers, cloud providers, technology providers that form part of that ecosystem. And as Simon said, the large financial institutions, this should be nothing new for them. But actually, as you go down the ecosystem, then it becomes a little bit more complex, and there's a whole new, I think what's unique about the DORA is there's a whole new extent of companies that fall into the vacuum of DORA and have to be compliant.
Yes, so we have, for example, payment company, and I'm sure a lot of smaller fintech companies might be caught by that, and they would be surprised. Well, I hope not, but let's hope they all know about DORA by now.
The question I have, where did this DORA legislation come from? How is it so well written that there isn't any issues that we should just so heartedly trust it? And where does the power to implement it come from? From what authority does it just get to overreach everybody? Who's the governing body that's pushing this forward?
Is there anything you want to add to this? Kobe, do you have anything to add on this, or should we move to the
Yes,
next?
maybe just to give some perspective regarding the cybersecurity background of DORA. Basically, the DORA is, I think, part of family of regulations all over the world, which is basically rising around the resiliency and the cybersecurity and the assurance around supply chains, also in the defense sector, in the critical infrastructure sector, and in others. When we look on the relationship between enterprises and in this context of this discussion, financial institutions, payments, hedge funds, broker dealership, all the ecosystem, there is more and more dependencies of those entities in others outside of their premises. Connections, payments, APIs, data processing, and so on and so forth. And basically, that became a really weak spot of the ecosystem. Cybersecurity-wise, supply chain became one of the most attacked vectors of the industry. That created the situation in which companies are being hacked, compromised, being unstable because of this risk. And regulation is following that risk, aiming to deal with that. And it's true, as Ian mentioned, that big guys are being there forever in terms of third-party risk, but the importance is to understand the trends around those regulations. DORA is one of them. One is way more scale. The companies need to scale their oversight dramatically compared to what they've been used to. The other one is around like vertical exposure, the ability to understand the chain itself and not only just check up the immediate connections. And the third one is to move the needle from periodic assessments and audits towards continuous monitoring, which is part of DORA requirements. And that sums up to way more scale, much more friction on the company, and in that regard, all of us need to be prepared.
Thank you very much. So the obvious question, the first obvious question is, so who will the DORA regulation affect? I would start with Simon here, and then we'll move to Ian, and if Kobe wants to say anything about that.
Sure, thanks, Michal. So if we look at it at its simplest, there are three types of organization, to my mind, that are impacted by DORA. So firstly, we're going to keep talking about financial entities. This is a specific type of organization that's subject to the regulation. So we're talking about financial entities with a presence in the EU. I think we'll talk about the UK dimension shortly. The definition of a financial entity is really broad. It encompasses the types of organization that financial regulators haven't really focused on that much to date. So obviously it includes, the usual suspects, banks, credit institutions, insurers, but it also includes entities that haven't faced a lot of scrutiny: crowdfunding service providers, crypto asset service providers, data reporting service providers. So it really does.
They're now having to redefine what it is to be a digital financial entity. They have to broaden that to now include, digital what's a financial entity? They're now having to broaden that horizon. That's what I was trying to say.
Does engulf this entire wider financial ecosystem, and to Kobe's point, this interconnected nature of the way in which this world now works is front and center in DORA. That brings us to the second category then of organizations that really need to be taking notice. And this is ICT, that's information and communication technology, third-party providers. So this is the organizations that are delivering mainly IT-focused services to those financial entities in support of their end clients. That's number two. Number three is a subset of the second one. And these are designated critical ICT third-party providers. And they are designated critical because they are structurally significant to the financial system. And that's a determination made by the European supervisory authorities, that designation critical. There's a process that will be going through the first half of this year to arrive at that designation. So if you are fortunate enough, and I'm being a little bit glib there, to be designated as a critical third party, you're going to be subjected to direct oversight by what's called the lead overseer for your designated for your organization, not only one of the European supervisory authorities. They have the power to impose fines of 1% of average daily turnover for non-compliance. So in broad terms, those are the three categories of organization that really need to be taking notice.
And you mentioned there EU presence. So essentially, these regulations don't only apply to EU member companies incorporated in those EU member states. So if they have some sort of presence in the EU, or as you said, they are providing critical third-party providers, basically, then they will also be
yes, there's an important, absolutely. There's an important thing to understand. I mean, as such is the interconnected nature of our world, and the UK again is systemically connected with, for better or for worse, given the the events of the last 7 years or so, we are still highly connected with Europe. And organizations that are not necessarily have their formal base in the in the EU. So this is third-party service providers may not have their base in the EU, but they come in within scope. They will still need to be included in reporting through to what we call the competent authorities.
So Ian, would you tell us, because we have a lot of companies from the UK, which is not an EU member state, and regardless of what you think about Brexit, this is the situation now. So how will the UK entities be impacted?
Yeah, no, it's a good question. The reality is that any UK financial institution with an EU presence, as you've already said, will be fall into the DORA regulation as well. So whether it's a bank or insurer or any financial company will fall into this regulation. Now, the good news is that the UK also has similar standards as EU DORA. They're slightly different in terms of scope and nature, but there is the Bank of England's, the FCA's operational resilience framework, which actually looks at operational resilience in its broadest sense. It's not just a digital resilience act, it's actually a broad business resilience act. So it will look at other risks, such as pandemic or flood or other types of business.
This act, as he's trying to eloquently put it, is very intrusive because it doesn't just go past the financial sector. It can broaden into different. Interesting. Let him say it.
Risks that kind of resilience act. So we'll look at other risks, such as pandemic or flood or other types of business risks that can occur. The Bank of England.
I'm aware. Oh, let me get this ready. This act doesn't just cover the financial sector. This act, the resilient Act of 2025 will encompass also anything that will affect that sector. So if there is a flood that will affect the energy or distribution of the network, the act is covering that as well. It's a very broad covering.
It also has CBEST testing in place. So again, another DORA requirement. So CBEST is the bank's security testing regime for any sizable kind of financial institution that that requires regular security testing, and that's something that actually Aon does as a firm, and so we've got many colleagues who do that type of thing for financial institutions. And then there was the whole aspect of the supply chain, and again the FCA has a third-party regime that they have in place for assessing third-party companies. Now, the difference with the Bank of England, those are financial regulations. They don't necessarily will extend to, for example, if you're an ICT provider in the UK, that wouldn't necessarily apply to you. Now, if you're an ICT provider in the UK and you're servicing an EU member state financial institution and you're deemed as a critical third party, then you will be required to be DORA compliant by the 17th of January.
But understand, if you are, what is he on? What is he saying on?
Then you will be a financial institution and you're in the UK and you're that wouldn't necessarily apply to you. Now, if you're an ICT provider in the UK and
right, IT provider. So if you don't have it, it's okay. You don't have to have it. But if you want to actually make some money, well, you're going to need to have it.
And you're servicing an EU member state financial institution and you're deemed as a critical third party.
Because remember, the where the money is right now is to be serving the EU member states that are going digital. So you're going to need to have it if you want to. You see how they're kind of saying what they're saying. If you want to do business with us, you're going to have to comply with us. And you know what? We're going digital, so you're going to have to
party. Then you will be required to be DORA compliant by the 17th of January. So it's look, there's some nuances in there. There's some similarities, there's some parallels, but actually, I think for each company, they really need to kind of get in and understand, for you as a business, where are you on that level of compliance and relevance for DORA? But yeah, for sure.
So basically, if you're a company that's going to be dealing in the new financial market, they're basically like, yo, where are you? Because you're going to need to be by the finish line in X time. So like, we're trying to get you up to speed.
UK companies could definitely fall into this spectrum.
And I suppose a lot of UK payment providers and financial institutions actually have presence in the EU as well. I don't know many who don't. So essentially, you would be caught if you are an international company, whether you are in the UK or EU. So you really need to find out. Kobe, did you want to add anything to this, or should we?
Just to contextualize, so in the audience here, there might be like financials and there might be ICTs, and we need to remember that both of those need to be prepared. The good news, I think, is that even though the jurisdiction, the accountability, the liability issues, supervision is very dramatic in that regard, there is not really something very new in terms of what needs to be done. We will speak about it later. Those are practices that has been here for many years. A lot of the ICTs were not subjected to processes and were not preparing well because they were not requested by their customers, and that's going to be changed. So in that regard, there are practices to be embraced, and it's a process that can be done fairly easily, and we need to just set up the process in order to do so well.
Thank you very much, Kobe. So obviously, we see how wide-reaching these regulations are. When will the regulation be enforced, and where do organizations need to be in terms of compliance by January 17th? Because obviously that's the key date in
Yeah.
3 days' time.
Yeah, that is kind of drop dead date when you need to be. I mean, frankly, you already need to be compliant. Actually, the requirement to be compliant with DORA was actually 2 years ago, which is when it came into force. But now the difference is it's enforceable, meaning you can be, audited and potentially fined for non-compliance. And certainly, if you had a breach or something like that, any financial services business or one of the critical ICT providers at this stage, you can expect that the regulator, the EU regulator of that country, is likely to come after you for the types of penalties that there are varying penalties and ways of applying that. But this is when you need to be ready. And so what do you really need to have in place by January 17th? Well, there's actually quite a long list of things, but broadly, it's having a your kind of good governance in place around DORA and being able to have proven that you've performed kind of a risk assessment around DORA, that you have a plan in place for achieving DORA requirements. You will need to evidence things like having a security testing that has been performed. You would certainly, there's some practical things. Anybody can go and read what the DORA requirements, but I would certainly say you need to have evidenced your security testing. You probably need to have reviewed and at least dusted down your incident response plan and actually show that that's there and ready. You certainly will have to have, if you're a global financial institution, you will be doing this already. But if you're slightly further down the pecking order of, financial institutions, you should certainly have reviewed your third-party supply chain. And if you're a third-party supplier already and you've been tapped on the shoulder as being DORA, falling into the scope of DORA, then you will need to have got all of this in place. One of the key things for January 17th is actually having the kind of register of interest. So that is literally your, a documented view of your third-party supply chain, which ones are critical providers, etc. That register needs to have been shared and it was at least available to the regulator of the EU member state where you're registered. So that needs to have been shared. And what the EU is going to use that for, is actually to aggregate all of those registries of interest so that they can then figure out who are the critical providers across all of the EU financial institutions, and make sure that appropriate controls are in place and so forth. There are some interesting things that we think are coming down the line, which we'll share later. But fundamentally, getting that registry of interest in place by the 17th and those other things that I mentioned are key.
Okay, that's great. Simon, did you want to add? Kobe, did you want to add to this?
Yeah, I suppose it's that sort of real world view, because everything that Ian says there is absolutely right. You sort of got to be compliant now, and it's enforceable this week. The reality, of course, is that the regulators, the supervisory authorities, there's an element to which the wings are still being built as we're all going down collectively down the runway. We saw even towards the end of last year, the ESAs, the European Supervisory Authorities, they ran a dry run exercise for the Register of Information process that Ian's just been talking about, with a selected number of entities from a small number of European states. That in itself then resulted in a disagreement, a little micro spat, if you like, between the ESAs and the EU Commission about the type of identifier that third parties needed to have and to be included on the register, what we call a legal entity identifier, an LEI, and there was a whole disagreement about that. Now, the significance of that is not the detail of that disagreement, but it's the fact that those conversations are still happening so late in the day. This process that Ian is talking about.
Can we hear the disagreement? I would like to know what the spat was about. I think that might be a valuable perspective if there was such a heated debate, we need to hear that debate.
Aggregate information about the third parties that financial entities are using with a focus on those that are critical, and then correlate aggregating that up to European level, and then that designation of which are critical. There's going to be a big focus on that specific process over the coming months. That's where the real attention, I think, will be going in immediately. I think in reality what it means is there's a micro breathing space within which, as organizations, we can focus on those core disciplines that Ian talked about, identifying your critical processes, the assets that support those, your risk management approach, business continuity, incident management, all of that stuff. Get on it now, because you've got a tiny bit of breathing time, but not a lot.
Yeah.
If I may add to that again, third-party risk practices have been here forever. So the main thing is that even though the 17th is like in 3 days, I'm in New York, so I bought myself another half a day. So, but still, it's a very short period of time. So let's leave that aside as a date. I think the key term is to have a due process and to have a supply chain program. If you already have a program, you need to examine it and maybe to extend it, most probably to extend it beyond like the traditional, let's do an assessment every 2 years for what we think is our critical vendors and we're done with it. No, it's supposed to be an entire program, starting with inherent risk modeling to be able to recognize who are the critical vendors, what are the reasons, how do you rank them, how do you prioritize them, how do you address them, and then to assess them well enough. And I must say in that regard that the industry nowadays is not well developed. It's not providing good enough assessments and audits for an entire range of 10,000 vendors for a bank, for example. That needs to be way better. The third one is around a continuous monitoring program, which basically takes the touch points in like 100x's in terms of the potential issues that needs to be handled and what can we do around that. Evidence, as Ian mentioned, and then in the end, which is very important and mentioned in the regulation, disclosure program. So most of the large enterprises has in their ELAs a vendor disclosure upon breach and all kinds of clauses dealing with that. But it doesn't mean that the ICTs are standing in those requirements. It doesn't mean that the customers themselves, the enterprises, are enforcing that. And now you have liability for that. So an entire process should be set around that. Taking that to the smaller participants, the smaller financials, most probably they don't have a process in place. So in that regard, they need to move fast. And as Simon says, to embrace or to at least kickstart a supply chain program to be initiated immediately in order to be prepared in like few months or so.
Thank you. That brings me to another question, obviously. So you're talking about what needs to be done. And of course, the larger institution, the larger companies already have most, I would say, or something in place, and they need to dust it up. And those little ones need to create a new program, as you said. So we don't have much time. We all know that already. So without freaking everyone out, how can technologies be utilized to enhance the compliance process and also to help with this extremely puzzling situation? Should we start with Kobe? Because you were the last to speak.
Yeah, sure. So basically my always I give the same answer. You need to buy my products. But beside of that, putting joke aside, the entire process or the requirements is sort of a very complex puzzle that you need to build in order to understand an engagement risk. What's the engagement between a financial and its ICT or critical ICT? It's a combination of pieces of a puzzle. You need to scan them, to pen test them, to assess them, to audit, to verify, to continuously monitor, to check their cloud posture, if which is becoming a huge thing, to do that on a continuous basis to have a disclosure program. And if you have 500 vendors or 5,000 vendors, that's building a picture out of a puzzle 500 times. So in that regard, this is where technology comes into place. It's about embracing standards. I would always advise not to reinvent the wheel. I think there are good frameworks out there. The regulation itself leaves a lot of room to embrace different things and to adjust them. There is the ability to contextualize the frameworks to your own needs, the ability to set up a digital process. And in the end, only then you can buy my product. But beside of that, I think there are very good technologies available, and depending on the case, their solution is there, and you can orchestrate something pretty quickly.
Thank you. Simon?
I think I might be able to help with a bit before buying Kobe's product. But to my mind, the role of technology in supporting this, there are broadly two categories of technology. You've got tech that supports and makes efficient the process of compliance itself. So I'm talking about GRC platforms. I'm talking about harmonization of control frameworks, about management of compliance attestations, about gap assessments, about audit support, about remediation tracking, compliance status dashboards, all that lovely stuff. And for full disclosure, I live a lot in that world with our great partners at Diligent. There are, of course, other GRC platforms available. The second category of technology is really about the substance that DORA is driving at. So it's about risk assessment, asset registers, capacity management. It's about event logging, vulnerability and patch management. It's about privileged access management, DLP technologies, a security incident and event management technologies, third-party assurance, of course, what Kobe is specializing in here. This is about efficient, effective, consistent value for money use of tooling to support IT and security operations programs. It all happens to support DORA compliance. There is a nirvana zone, in my view, which is about when those two categories of technology talk to each other. And it genuinely, I think, is a bit of a nirvana zone. One word of caution I would suggest about technology in the context of compliance, and that's about transparency. Understand exactly what your tech is doing, so that you are in a position to explain its role to anyone that applies scrutiny, because black boxes in the context of risk management and compliance really aren't helpful. That's a bit of a bugbear of mine, but that's my view.
Thank you very much. Ian, did you have anything to add?
Just briefly, I mean, obviously we talked a lot about technology there. I think that's, tech is really important in this to enable and protect a business. Two brief reflections. One is that it's, tech's important, but actually so is financial risk. And we'll talk about financial quant in a bit, but insurance is a big part of protecting against financial loss. So I think you need to think about not just the tech, but your capital at risk, on the balance sheet, and also this compliance regime that's in place. I think we should turn it upside down a little bit. The compliance is there just to measure and monitor to make sure that it meets a certain standard. But actually, all the things that DORA is talking about are actually really just common sense, right? We should be doing this anyway, and so it's really just so that we have a common language and framework for agreeing which companies meet the standards agreed by the EU. But any business should really be heading this and doing far more on this topic, particularly if you're in tech and you're in finance, to stay ahead. And we'll come on to the M&A impacts, because actually it comes back to value. But we'll come on to that later.
If I may add a sentence to that, just to give a bit of context regarding the magnitude of the problem. On average, every assessment, every audit being done, generating about 15 to 20 gaps in different severity, from which about a third are considered severe by our customer definition. That means that if you take a big bank or a mid-sized bank that might have at least a few hundreds of vendors, or a large one which might have a few thousands, from that let's take about 20% will be considered critical or meaningful. That might mean tens of thousands of issues that needs to be monitored and optimized. In that regard, there are evolving solutions that utilize or leverage AI capabilities in order to optimize your effort. That's a lot of FTE potentially if it's been done like old school. And that's another thing that technology-wide needs to be considered.
Yeah, very good point. So we talked about enhancing compliance processes, but how can innovative approaches actually bolster cyber resilience in the face of this growing digital threats that we hear about every single month, unfortunately? Should we start with Ian?
Sure. I think there is a really pragmatic way to approach this. So in amongst all this complexity of cybersecurity and cyber attackers and some of the tools and tech that has been talked about, ultimately what's at risk is, particularly for financial institutions or supply chain, is financial impact. What is the financial impact in your business? And so one of the things that I would certainly recommend is a good way to look at this is to really bring together cybersecurity with your executive team and your board, etc. In order to integrate this, you can't talk about the tech kind of level because not everybody's going to understand it to the level of degree, and frankly, it's a very complex landscape. But actually, to talk about the financial impact, and to do that, you can do things like cyber risk quantification, which is to look at your business and break down the key business processes and look at, for example, your payment system or your KYC process or your backup solution, for example, and say, well, what happens if that was either taken out for a period of hours or days, or what happens if a data breach happened or a ransomware happened at this level or in a particular part of your third-party supply chain, and to risk quantify the financial impact, because what that does is it gives you a natural view in terms of the context of what is important in your business. Because actually, Colby mentioned the vast complexity of global financial institutions will have hundreds and thousands of providers. Well, not all of them are critical. There's only going to be a subset of that are going to be the big focus ones, and to do a cyber risk quantification exercise, we'll draw out which one's the most critical, or to understand your application stack, which is the most critical part components. And it's not just about applications and tech, it's about people as well, because you start to look at people or locations or sites. All that needs to come together to actually understand financial impact. And so, when it comes to investment and prioritizing the amount of spend and prioritizing the amount of effort, taking a financial quant view of this really brings together and brings the executives into the place. So they're making the decisions about this, not just purely the cybersecurity team.
Thank you. Kobe, do you want to mention something here?
I would just mention a trend that we observe in few industries, including the banking sector here in the US, which is moving to the next level in terms of sort of information sharing. In the end of the day, an ICT, and definitely a critical one, most probably serves more than one customer. And the situation nowadays in the world is that every customer conduct their own process, which is basically checking more or less the same things, only in a bit different context. Part of the evolving trends is to be able to sort of have a single, unified, and continuously monitored evidence posture of this ICT, of this vendor, and be able to syndicate the data around that and contextualize that to different business engagements in order to save time, effort, and enable to scale on both sides. This is something that was tried beforehand, not always successfully, but in the case where everything is evolving towards very, very large scale of requirements, it's just necessary. So one of the approaches is a utility-based approach towards monitoring vendor posture, definitely in the cloud environments and software environments. And this is something that every customer, every financial should consider when embracing a new technology. Definitely in a situation where you want to ramp up fast, there is no need to reinvent the wheel.
Excellent. Yeah, no need to reinvent the wheel. I think that would be our key phrase here, because people might be shocked, but actually a lot of the stuff is common sense. A lot of the stuff is already being practiced in most payment and financial and cyber institutions. Risk assessment and planning is not something new, like out of the blue. So it's just need to be adjusted a little bit. So let's talk practical here. Can you please share some practical strategies and experiences for our audience to implement the DORA regulations effectively? Should we start with Simon? He was very quiet.
Sure. I mean, Mikhail, I've just got a comment to make about the topic of risk quantification.
Sure.
Scenarios, having the business engaged is really important when we are trying to understand potential impact, and we need to understand this impact as a prerequisite for this concept of criticality. So scenarios and workshopping with the business around those scenarios can be really powerful. Just a second point on the mechanics of risk quantification, it can get very sophisticated. It can involve, Monte Carlo techniques. It can involve lots of stuff about granular understanding of annual loss expectancy. A lot of larger organizations are well placed to undertake that sort of activity. Smaller organizations tend not to be so well placed to incorporate those sorts of techniques when understanding risk. So the key thing to my mind about risk and quantification is to have something that's consistent, that's credible, that has integrity, that has defensibility. Because the word accuracy in the context of risk is not an easy word to use, because if you're that confident in accuracy, then we probably shouldn't be using the word risk. That's just a comment on that previous conversation. In terms of strategies for compliance, it depends who you are. If you're large, if you're from a regulated, a heavily regulated industry sector already, we've said this already, you're likely to be pretty well placed. So if you are a large financial institution, if you've got a relatively mature GRC function, I'd be focusing on a couple of things right now. I'd be focusing on the specifics of DORA compliance, mapping the requirements to your existing control frameworks, identifying specific gaps. Those are likely to include DORA-specific reporting requirements, like the requirement to report major incidents and to triage an incident to determine whether it is major based on predefined thresholds. But it's also, as we've already said, I think the thing for large organizations, because of the sheer scale of the supplier base in many organizations, to Kobe's point, put a big spotlight on your portfolio of third parties, identify those that are critical. You'll likely have done that through some sort of triaging in your supplier assurance process, and review standard contractual terms for DORA compliance and open a dialogue with those suppliers of ICT services that you reckon are most critical. So that's for larger organizations. If you're less mature, I think you've got to take a bit more of a bird's eye view and come at it from a little more holistic, if you like, level to start with. So first, make sure that your governance layer, your management body, is up to speed with the requirement from DORA and compliance in the first place. I've seen too many organizations take a bottom-up approach to compliance, and that doesn't tend to end well, let's just say that. So similarly, start prepping procurement and legal about the fact that you're going to need to coordinate closely on supplier and third-party management in the context of DORA. Get to grips with the core disciplines that DORA really requires.
I believe the reason why DORA is now so important is because there's going to be a lot more third parties that were initially outside of the framework of the previous regulations. So DORA is now in place to, one, invite the third parties in, but to also capture any third-party action that they previously were not able to regulate.
Identifying your critical processes and information assets, having a consistent approach to understanding risk and assessing risk. Keep it simple to start with, revisiting your end-to-end incident management process, reviewing your business continuity and testing arrangements, disaster recovery, crisis management. Obviously, take a really close look at how you're managing third parties. And then once you've done that, make sure you've got a broad level of good practices in place. You can start dripping that. Obviously, take a really close look at how you're managing third parties. And then once you've done that, management, obviously take a really close look at how you're managing third parties. And then once you've done that, make sure you've got a broad level of good practices in place. You can start dripping down into refinements. But if you're fairly mature in your current approach and you're not used to that regulatory scrutiny, in my experience, going through a regulatory sort of audit environment type process, the regulator is going to be looking for broad adherence, and that you're on a maturity-based journey to improvement, and being able to evidence where you are, where you're going, what you're going to do to get to that next stage of maturity is really important. Tracking all of that and recording the decisions you're making, the actions you're taking, super important. There's way more I could say on this, but I suggest we should give the other guys a chance to talk.
Yeah, it's really important to record your efforts, because if at any time someone says to you, oh, you weren't planned, you can always show, yes, we are on the way, we are trying to do our best to get there. Obviously, it might help you, it might not, but in my experience, normally, it's especially with new regulation, new imposition, there is a little bit of wiggle room with the timing. So please, Ian and Kobe, what do you have to say about that? Would you like to share some practical strategies?
Ian first.
Okay, Ian.
No, look, I echo this. I mean, I think I've got some other points to make around, mergers and acquisitions, and I think, what needs to be considered there. So I think, actually, Kobe, why don't you go, and then I'll jump into the M&A practicalities, because that may be a more effective use of time.
So I would address two practicalities. One, regarding what you mentioned, Simon, even in large organizations that are doing third-party risk for a long time, there are a lot of situations we encounter in which the inherent risk rating or the risk profile has been done once per vendor, and it's a thing that needs to be changed. There are multiple engagements per ICT in large organizations, and a lot of the times they find themselves surprised by the fact that they underestimated the risk, and when they do a process, they realize that they need to assess or to strengthen the controls over a certain ICT. So I would say that a risk modeling should be done fairly quickly. In large organizations, there is also the practical issue of workflow within the organization. Most of the times, the risk department or procurement doesn't have all the oversight, or all the data needs to be collected internally from business owners in order to correctly understand the risk. This is one element, and if you are small, that's fairly easy to do. And on the other end, reach out to all the vendors, at least for an initial triage. In terms of the due process that I believe will be checked is whether you've done something in the interface with the vendor, and not necessarily only the small portion of critical ICTs. Reaching out to them with a triage, or if it's already an existed and assessed ICT, reaching out again with the delta, which is required by DORA specifically. That will be a good starting point that afterwards you can build further the program. Last thing, there are out-of-the-box vendor disclosure processes. This is why it's called best practices, because you don't need to reinvent the wheel, as Michal always says.
Thank you. Let's move on to the next question. And Ian, you mentioned we need to talk about M&A, like mergers and acquisitions. We have to talk about it. Clearly, it will affect. Well, how clearly it will affect it, but how will compliance with DORA impact M&A activity for organizations?
Yeah, well, mergers and acquisitions, right, which is where me and my team specialize and spend most of our time. It's a multi-trillion-dollar industry, first of all. So in itself, it's relying on the financial, kind of markets and DORA to be resilient. I was talking about, people paying for their groceries earlier, how important that is. Well, it's also sustaining a multi-trillion-dollar M&A market. It's also storing, it's a store of value. How we store value of our efforts is in this system. So it's a critically important system. And as it relates to mergers and acquisitions, specifically, it's actually quite a complex landscape, because it might be a financial institution that is DORA regulated making an acquisition or a divestment, a carve-out itself, in which case all of that's going to have to be under the DORA regime, and the regulator's going to be watching. And if they're acquiring, say, a non-EU entity and integrating that into their organization, that's all going to have to meet the DORA requirements. So there's kind of post-merger integration considerations, there's due diligence considerations to understand what the current setup is. But it's even more complex than that, because it may be, we spend a lot of our time working with private equity clients, both here in Europe and also globally. Those PE clients themselves don't have to be DORA compliant as a fund, but any of their portfolio companies do, and any of the acquisitions that they're looking to make that might be a DORA regulated entity, or indeed a third-party provider for a DORA regulated for an EU financial services business, does need to be looked at. And so what we typically do is, Michal, is look at things like cyber due diligence, technology due diligence, data privacy due diligence. When you're looking at that in the context of a DORA regime, you're obviously going to have to look at the target business in the context areas that are important for that regulation, which is, as we talked about, the governance regime to set up, their kind of incident response plan, their security testing, frankly, the gap analysis with DORA, and any cost to achieve. Now, this is where it comes back to. This is why I like M&A, because this is where the rubber hits the road. Because what an investor will look at is say, okay, you don't have these controls in place. Well, if you don't have that in place, that's going to have a financial impact, because it's going to cost me money to close that gap, and therefore that's going to have a multiplier impact on the deal. Of course, the other way around is also true. If you're actually very good comparative to other investments, you actually might get more of an uplift and more of a kicker. And this is where cybersecurity and regulation and being good at this stuff and having a good track record of it can actually come back to the value in your business and, frankly, the efficiency of the business. We quite often do cyber due diligence where things come out the woodwork, and it actually slows down the transaction. It means there's more, scrutiny. There's more SPA kind of definitions that get put in place. There's more financial impact. So having all this tied up well with DORA is key, and will make your M&A activity.
It's going to be companies like Shopify. Companies like Shopify will be the ones that have to comply with DORA.
It's a lot smoother and potentially improve valuations of businesses.
I would just want to add to this one. Obviously, in an M&A situation, if you are selling a business, if you are selling a business, and you are not fully compliant, or you are not slightly compliant, if you can't amend it, apart from moving the needle on the purchase price for your business, you might have to also provide indemnities, and you definitely need to provide warranties now. These are a whole new set of warranties now, but you will also be probably required to provide indemnities, which is kind of, unless you take an indemnity insurance, it's kind of hovering over your head. And someone who wants to exit via sale of his business and go and live in on a beach under a coconut tree might have a little bit of a problem with it. Definitely compliance is extremely important.
Absolutely. And that's where things like transaction liability insurance come in to actually smooth that process, take those risks out of the W&I kind of process so that you can, have an insurance-backed component so you can go and sit on the beach in the Bahamas and not be tied into some, kind of capital risk over your head for a period of years. The last thing I'd mention, and we are on with the London Stock Exchange, the other thing is IPOs, right? And that's where, having all this in place is actually very important for the IPO process, equally as important, because, again, even though you might be listing in the UK Stock Exchange, London Stock Exchange, we just talked about how that can all, you can still be DORA, regulated, and the fines. Investors don't like fines, right? They don't like surprises, and so having all this in place will just make you a more robust company and a more attractive company to your investors.
Absolutely, and essentially, you might have a situation whereby you'll have obligations to do them afterward, right? Yep. So to follow on these things. So listen, we only have another 7 minutes, so I have 2 more questions, and I have some questions from the audience. So if we don't manage to answer everything, we will try to send those later on, and I'll do a post with some answers to those from the panel members. So the next question I have is like, what's next? So what should companies expect in a few years' time? Like, what is coming after this DORA regulation? Ian, do you want to start quickly?
Yeah, just briefly. If you look down the line and where this is going, I think one of the exciting things that DORA enables is actually CBDCs, or central bank digital currencies. And there's already preparations underway with the EU for an EU digital currency. The same in all the major economies are looking at was the UK, the US. China is actually quite far down the line on a digital renminbi. I think that what it all does is makes it this whole digital architecture resilient for digital currencies. And I think literally, if you look at the timeline, certainly by the end of this decade, we will be using digital currencies, and quite possibly before then. And so I really see DORA as being an enabler for that, and exciting times ahead in terms of how we'll be doing business in the future.
Simon?
Yeah, there's one notable absence from DORA. You scatter through DORA, you won't see references to AI. And so it's a bit of an elephant in the room. And of course, you've got the EU AI Act. The key thing to my mind is that AI assurance is going to be increasingly coming to the fore. It should come down again to criticality, deploying AI within risk-based guardrails. What does that mean? It means thorough risk assessment. It means taking AI-specific threats like data poisoning into account during those risk assessments. It means the resilience of under the supporting infrastructure that AI is running on. In critical environments, it means subjecting AI to stress testing, trying to break it, trying to fool it. All of that is consistent with the principles that you see in DORA. It's just not mentioned explicitly. So don't forget about AI, because it's going to be super important. I think that's my key point on this theme.
Okay. Kobe?
I would just add one point in terms of how I see the trajectory in terms of business. DORA is one of a set of regulations that, if you look on the ICT space, it's quickly evolving to become a serious business enabler. The inability of companies to be able to continuously assure their security posture, their compliance posture in front of their customers and the regulators will quickly evolve into the inability to do business. We start to see that in other sectors that we operate, like the defense sector and CMMC. And that will be, I think, the next step with DORA, that those who fail or don't invest well enough in the process will have an impact in terms of their ability to operate with financial institutions that will require that.
Yeah. 100%. Well, we'll have to see how it goes. One final question. If we have some more time, we'll I don't think so. We'll do the other ones. But what are some of the and briefly, what are some of the practical, urgent actions every company that think it will be caught within the regulation should take now? Let's start with Kobe.
Mapping all your vendors and classifying them and reaching out to all your vendors accordingly and triaging them as a first must-have step.
Okay, sorry, Simon?
Identify your critical business processes and the information technology assets that support those processes and the dependencies on third-party support provision. So getting on top of your third-party base is massively important. There's going to be a focus on this from the competent authorities, they're called, your regulator basically, super fast. You're going to need to get those registers completed, get on top of your third parties and talk to them.
Excellent. And yeah, do you have a third one?
Yeah, I do. Like building on the earlier point about this isn't just about the technical risk; it's the financial risk. So if you've been through a financial quantification exercise, and Simon mentioned some techniques for that, but actually companies like Aon have stores of proprietary data over loss profile because we're an insurer. But actually, the reason we have that is because making sure your balance sheet is protected, whether it's a cybersecurity loss or a tech E&O loss, which is if you're a tech provider, you're providing technology services, or things like directors and officers insurance, etc. If you're part of the executive team, this all comes down to making sure that your business is protected. Not. We have to make the assumption today, in particular today, that cyber breaches will occur, data breaches will occur, and therefore you have to be protected and ready for that, both in terms of incident response, but also the financial impacts of that, the litigation costs, the protection costs that come out of the back of it. So my advice would be make sure you have adequate and sufficient insurance to back up all of the technical things that the two gentlemen have mentioned.
Right. So this has been fascinating, and you would see by the number of questions we had afterward. I think we will have to find a way to answer some more questions to our lovely audience. So thank you so much for being here today and talking about this fascinating subject. And I hope we didn't scare people too much and encourage them to use the tips that you gave them just now. Thank you very much.
Thanks very much.
Thank you.
party support provision. So getting on top of your third party base is massively important. There's going to be a focus on this from the competent authorities, they're called, your regulator basically, super fast. You're going to need to get those registers completed, get on top of your third parties and talk to them.
Excellent. And yeah, do you have a third one?
Yeah, I do. I do. Like,
That was very interesting, guys. Sorry about that. I've been having some technical issues. So, it's coming into play. It is going to be a very interesting way how everyone has to come into compliance in the next couple months. So let's see how that all works out.